If you've been watching the housing market and thinking, Kathy, it feels kind of boring, well, that's good because boring is exactly what veterans should celebrate. The last few years were chaos, fewer homes, bidding wars, and VA buyers getting sidelined. But 2026 is shaping up differently, and it comes down to three words: inventory, values, and appreciation. When inventory improves and price growth is moderate, the market stops being like a cage match and starts being negotiable again. Hey everyone, I'm Kathy Sabater, mortgage strategist, and today I'll show you why this 2026 setup is exactly what VA buyers and VA sellers can win. Number one, inventory is the lever. Let's talk about exactly how the market has changed. It's not the headlines, it's not the vibes, it's inventory. How many homes are for sale and how long they're sitting. Here's a real snapshot. NAR, National Association Realtor, reported total housing inventory at about 1.18 million homes, with roughly a 3.3 month supply in their recent report. That matters when inventory is tight because sellers act take it or leave it. Buyers overpay just to win. When inventory builds and home sits longer, sellers start asking, how do I get this house sold? That's where the power shift happens. More inventory equals more choices equals less panic, and less panic equals better terms. So even if the market feels boring, it can actually become healthier for buyers. Number two, values plus appreciation, the boring sweet spot. Now let's connect that to values. What experts say, moderate appreciation, they mean prices rising but not exploding. And we're seeing that in major forecasts. Zillow's forecast, home values went up 1.2% in 2026. Now, Fannie Mae's home price expectation survey, it's about 3.6% growth in 2026. And NAR, National Association of Realtor Chief Economists, has discussed minimum home price growth between 2 and 3% for 2026. So, what does that mean for your wallet? You're not chasing runaway prices every month. You're not betting on a crash. You get stability so you can plan. And in fast appreciating market, buyers feel pressure to rush. In a moderate market, you can slow down and be strategic. That's why moderate appreciation isn't bad news. It's breathing room. And it gives VA buyers a better shot at winning cleanly. Number three, why this is a VA advantage. Here's where veterans benefit the most. When homes sit longer, sellers get realistic. And that's when VA offers get treated more fairly. Because what do sellers start caring about? Well, they care about closing time. They want to know about certainty. What about their net proceeds? Not just who waived the most protection. So in this kind of market, you start seeing more of this. Seller credits towards closing costs, seller paid rate buydowns, repairs actually getting negotiated, less as is pressure. That matters because the VA loan was designed to protect you, not force you to gamble to win a house. So if you're a veteran who got outbid before, this market setup, it's your comeback season. And what is the big win? Terms matter more than price in this market. With inventory, moderate appreciation, the biggest win isn't always getting a huge discount. It's getting better terms. Real life example. Can you cover part of my closing costs? Can you help buy down my rate? Can you fix the roof issue? Can you credit us for repairs? Those terms can change your monthly payment and cash to close more than a tiny price drop ever will. So, if you're watching values and thinking not much is happening, look closer. The advantage is happening in the negotiation. If you're a veteran and you want my quick take on your move, comment VA game plan and tell me your timeline 30, 60, or 90 days. And if you're new here, check out my VA Loan Masterclass playlist. It's VA strategy step by step because in 2026, inventory plus moderate appreciation equals opportunity for VA buyers. I'll see you soon.